following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour today with your humble, lovable, squeezably soft host, Koala Bear of Wall Street. Just a big cuddly teddy bear out here bringing you the news and some technical insight to the markets and maybe even a little fundamental insight to the technology side of this market. As we start the day off, normally what we like to do is just check and see if we've got any volume. 1.9 billion shares on the consolidated New York Stock Exchange tape, up 2 points on the S&P cash. A tepid view of earnings last night. We've got a lot of outliers on each side, both up and down. Of course, the one thing that everybody wants to focus on today is the Facebook, and we'll talk about that maybe later in the show. Everybody's talking about it ad nauseum. To me, the thing that hit me first thing in the morning was that Bloomberg was spouting some metric that they got from somebody else that didn't know what they were talking about, but repeating it enough times between 6 and 7 o'clock this morning that I felt like maybe I was going to throw up just a little bit in my mouth. But I knew that it was propaganda, and you can pretty much tell with companies that have no chance of survival, propaganda. It's much tougher to ferret out propaganda that has a real company with real products and even maybe the most exceptional product out in the marketplace today. But I knew, when I heard it, I said, okay, who didn't think about this when they said it? But the first thing I heard was the average American household is going to buy 8 Apple products before the end of the year. I'm thinking, don't think anywhere close to that. First of all, 70% of the business here in the United States is, for the most part, Android. You got about 30% of the market. So if everybody went out and bought something, would that 30%, if everybody just threw away their old iPhone 4s, would it still come up with the average household buying 4 or 8 devices? And, the way that they termed it too, are they going to say that a $1 app is the same thing as a $700 smartphone? Anyway, you could just tell that it's some of this kind of blather, especially. Didn't really bring it up yesterday or too much about Apple trying to basically manipulate any kind of press that they can. They want to control the narrative, and by flinging it out there as fast and as wide as they can, people really don't have a chance to stop and absorb and see whether or not what they're flinging is truth or bovine excrement. In this case, you could tell that maybe somebody was probably sleeping through one of the courses in journalism school when they started to figure out what the difference between propaganda and real news is. Probably no more important than in the financial arena, where it's easy to get people either manic or depressed about a particular stock. If you want to buy it on the low end, you depress them, and if you want to sell it to them, you basically get them all hot and bothered on the high side. And of course, there's no end to the amount of hyperbole for those people in Lutz, to actually go that much higher. Of course, now we're seeing the exact same thing in Facebook today. I didn't think much about Facebook, mostly for the same reason I didn't think a whole lot about Angie's List. Companies that don't make money in the market seldom do after they go public. Probably about 1 out of 10. So you've got a fairly decent bias out there about companies that are not making money when they go public, opposed to companies that do and have figured out how to really make money. And you could say Facebook made some money, but nothing justifying the original $40 price point. So now you've got everybody flinging numbers, seeing which one and who can be the highest out there. I think I saw $105 this morning for Facebook by the next quarter, or then the end of the year, some other drivel. I will reserve a judgment on how it works the next few days. A lot of people buying huge short interests in a handful of stocks. And a lot of times it's just that. It's just pushing stocks. Apple, some of these other ones like Facebook, as soon as you got the original earnings, they didn't really move that much. Basically, you had to have a cadre of people on CNBC and Bloomberg telling everybody that they're turning lead into gold, that this is the last stock. The problem is that when everybody's bullish, what do you do to get the next person to buy it? That's the problem. And for the most part, with Apple and with Facebook, how many bears do you have out there that are going to suddenly decide that they need to buy Facebook now that it's 76 or 77 bucks? Normally, you get a little back and fill, and then maybe someone thinks they've got a deal. Maybe it comes back to 72 bucks. Maybe you get some people that come back in to Facebook. Maybe if Apple comes back down to 92 bucks, you'll find some people that really want to come in there and buy it. But for the most part, it's people selling few shares, bidding these stocks up, and then huge moves as they squeeze the shorts out during earnings. And we'll get into a little bit more about that. But just a little things I had to get off my chest today. And what do we have going on here? In Histoire today, in 1987, the corporate assets of ZZZZ Best Company are sold at bankruptcy auction in Los Angeles for $62,000. Less than 4 months earlier, the carpet cleaning company run by a 21-year-old whiz kid had a stock market value of roughly $300 million. The stock had more than quadrupled since its initial public offering in 1986, but ZZZZ, Z-Best, had virtually no customers, revenues or assets, and Minkow, the guy that was the 21-year-old whiz kid, had set up an elaborate system of phantom offices and phony account records, even bribing a building owner to pretend that the presence of an outside auditor that Z-Best was cleaning his carpets. And he got a scant 5 years and, of course, ended up with none of the money. So probably not a great trade for his life for old Barry Minkow. But just to always remind you that these things will be coming, and greed is the killer when it comes to Wall Street. I have a lot of earnings out today, and I thought I'd just put up a little few panels up here on what's really going on. Overstock.com, a huge short interest up almost 20%, 19%. At least at 1 o'clock. I haven't gone back and looked at these the last hour. Vasco Data Security up almost 17%. Under Armour, a lot of short people on this side of it had a blowout earnings. So did Royal Caribbean Cruises. They've done that by shifting a lot of their ships here from the United States over to places like China. And those people really didn't spend a lot of time seeing the Cordia Concosta on its side for the last year. Apparently they don't watch a lot of news. Didn't know that Royal Caribbean would put on some flaky captains and kill off their clients. But interesting nonetheless. Anyway, they're going to be shipping more ships over to China, at least until the fall season, where they're going to have new ships come on here in southern Florida. But it's interesting. CryoLife, CRY, up 7.5%. Cash America, up 6%. Carter's up 6%. SunCoke Energy, up 6%. And Dr. Pepper, Snapple Group. Oh, boy. Well, the horrors never end. These guys have yet another horrible Dr. Pepper flavor coming out. When everybody I know that drinks Dr. Pepper has horrible gas. I'm hoping that one day someone figures out how to take that out. But when I see Dr. Pepper in somebody's hands, I normally go running for a gas mask, but I digress. Of course, on the downside was Build-A-Bear Workshop off 10%. D.H. Horton was off 10%. Materialon Corporation off just under 10%. Lifetime Fitness, another loser. Pinnacle Entertainment. West Marine, which I thought was very interesting. Gas prices pretty much had settled. Pretty good summer coming on. And a horrible winter is normally very good for the marine boat business. Of course, we have a lot of these West Marines down here off 7%. Earnings not all that great. Precision Cast Parts, 6%. Cabot Microelectronics off 6%. Titan International off 5%. And also Diamond Offshore Drilling off 5%. Duncan Brands off 5%. Alexion Pharmaceuticals off just a little less than 5%. Michigan Homes off 5%. Starwood Hotels off 4.5%. And USG Corporation off 4%. Of course, we know now the horrible numbers for building, and we'll get to that in a minute. Of course, after the bell tonight, Align Technologies, Altera. Of course, we already know Xilinx, just how horrible that looked at. And one of the, I guess the Xilinx CEO got a dress down last night on CNBC. Amazon, of course, after the bell tonight. Options on that show that this thing can move as far as 7% before you make a dime on it. So someone's looking for a very wide spread on both the up and downside for Amazon. Really telling you that Wall Street doesn't have a clue where the thing's moving. HomeAway, of course, after the bell also with Baidu, Cerner Corporation, Callaway Golf, Flextronics, KLA, Tencor, Maxim Integrated Products, Netgear, Pandora, Reinsurance Group of America, Riverbed, Starbucks, SolarWinds, Tempur-Pedic, Tresso, Universal Health Services, Visa, VeriSign, Washington Real Estate Investment Trust, and WSFS Financial Corporation. So there's probably about another 30 companies I didn't put on this list. I try to whittle it down, but I'll be passing this information on as fast as I can to Tom in the 4 o'clock hour, and maybe we can see and get some real-time action and analysis on earnings for that. When we come back, lower growth, bad sales numbers in the homes, and then at the bottom of the hour, we're going to try to get into some of these stocks that moved and take a quick, hot look at them.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
As we come back, we were talking about some of the economic reports. Of course, the Monetary Fund lowered its growth forecast for the world to 3.4% from the last projection of 3.7% in April, but held the line on its very optimistic view of 2015. But look like they're saying that the rest of the year is going to be tepid. Home sales, of course, here in the United States dropped 8.1%, the largest decline since July 2013 to a seasonally adjusted annual rate of 406,000 units. Of course, that probably didn't help D.R. Horton today. So we'll look at that. Okay, and SodaStream popped through $4, fairly good. They came out right at noon, and this is a highly short stock. My guess is that they came out with this just to run some shorts. Popped $20 on the news. No, it should have topped 20% on the news at noon, not $20. But a nice little mover out here for SodaStream, but they're looking for people to buy them. Makes a lot of sense. They've not been getting a lot of traction, and for the most part, I think that, of course, the whole Green Mountain Coffee Roasters deal with their competitor makes it extremely problematic now to go on their own. But it's hard to see exactly what the future of this is going to be. I was short them a couple of times. Short interest got way too high, though. This thing did go lower. I was trying to play one of the short squeezes on it and ended up making about 75 cents or 50 cents on it or something, and getting out of the way before it cratered about another $7 lower. Looks like it's popping back into this, but kind of be a fight between the bears and the bulls now for a while on SodaStream. Of course, gold was off today, and significantly. Of course, part of that is China's gold demand fell by nearly a fifth, and about 20. What was it? I forget the actual number. I had it listed. But basically the report out of China are that people are pretty much loaded up to the gills with gold, and good off a good 20% for the last 3 or 4 months for buying gold. And that didn't do gold any good, it looks like to me. In fact, I was short gold by one of the miners, but all the problems in the Mideast, I basically took the money off the table on the puts I had on one of the miners and stopped and moved to the sidelines. Probably the best thing. This is not really hurting that stock that I was short with puts that much, but it certainly looks like 1275, 1274 is in the cards, and probably even lower, maybe back down to 1230 if 1275 doesn't fit. And looking at a lot of the miners, really looks like they've got a tough time headed in the near future. MMM, Qualcomm. We'll just get a current quote for it. Qualcomm's off $5. They were probably going to be off a couple of bucks anyway based on earnings. But what's going on in China is basically what happens in China, which is no matter what you do there, well, there's a very good example of this, but it's so filthy I can't say it. Let me think of something else. I guess it's the scorpion on the back of the frog going across the river. And, of course, if the scorpion stings the frog, they're both going to drown. But, of course, Qualcomm is trying to tell everybody that Qualcomm is a monopoly in China. And, of course, it's a great monopoly anytime it serves the miserable communists over there on the high end, although it's harder to tell who's a communist and who's a capitalist these days. But more thugocracy. But anyway, they're just they're looking for some cash out here. And anytime you start making good money, the Chinese are going to make sure that they get a taste of it. It is not that different than Russia. It's a little bit of mob mentality. Qualcomm are probably going to have to go after and get help from the U.S. government if they can. But I don't know. The U.S. government seems more interested in a lot of other things than the welfare of companies that are operating out of this country. But to me, is it a monopoly? No, there's several other companies that make chipsets for them. The reason that they want it, they see Qualcomm making lots of money. They want a taste. We'll be back in just a minute.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Up 1.5 points on the S&P cash, just over 2 billion shares on the New York Stock Exchange consolidated tape. That's everything that trades even on ECNs and the Amex and the New York Stock Exchange. So, and decent volume for maybe a Friday. Thursday with all these earnings, we should be seeing a great deal higher of volume out here. Got a question out here. On the past shows, talked about options hedging, suggesting a lack of put buying and clear sailing to SPS 1800. Does this condition? No, that was about 4 days before expiration, and I did say that they came back in to the market after about 4 days. But there was about 4 days where every market maker just walked away from the market, and I was surprised that the market didn't fall apart right then. Looks like they're basically trying to hold this market up yet again, so it's not like they pulled apart. So I had a question in the den to look at 3M. You know, you had kind of this sharp pullback from December 31st back down to February 3rd. It's never really been tested. You've got a high volume low out there. You can look at that as testing the December 3rd low, which had 7.8 million shares. So it's kind of hard to say. Certainly lately, you've had some decent high volume days. And where was that at? You got a 4 million share day in here somewhere. It's got to be there. There it is on the 20th. And that's probably what you're looking at being the resistance right now. 4.2 million shares going across it. And, of course, 1.5 million shares now with earnings on the way, or due, or are they out? What way were they? Maybe they were today. What are they? Let's look at the headlines real quick. I don't think that they're out yet. Today's stream company thin results, earnings transcript. Guess they were out. Doesn't seem like it moved at all. Maybe that's why I didn't pay attention to it. So look at here real quick, because I want to bring up what are the stocks that are moving out here. Earnings in the morning, earnings Thursday night. Let's look at the stocks that had earnings this morning and just take a quick look at them. LTM. Take a quick look at that. LTM. Of course, you can always give me a call at 877-927-6648, or you can email me at path@tfnn.com. Life Fitness. I guess we're all a bunch of fatties laying on the couch these days, but boy, this looks like it's going to blow out the lows of January 31st. You've got 2 huge days. My guess is you're going to get a third. The first huge day down was June 5th with 5.2 million shares. You got 2.2 million shares. But you got the good opportunity out here once again to see Lifetime Fitness have some issues. D.H. Horton was another one that I wanted to take a quick look at during the show. And, well, it's right back down to this gap area. And it looks like it's got plenty of volume to blow out the previous low for March 27th at $20.95. But all the way back into this gap, those earnings numbers not looking a great deal like anything. I got a request to take a quick look at Baidu. Problem here is you really don't have any kind of technical signals that say this thing is going to croak. And, of course, all the push for these internet Chinese companies as Alibaba comes out. But there's just nothing in this thing right now. It hadn't broken the trend down. And what you need to do is see this thing go below and break that trend. But, boy, I tell you what, it looks like a tough one to get it. But it's going to happen, and maybe it'll happen on earnings tonight. What else do we have out here? I'm trying to know where I'm looking around at. TWIP, MCO, PCP. On the other side of it, what do we have? RCL, let's take a quick look at that, because we did speak about that. Royal Caribbean Lines, it was a solid breakout, and it looks like it's a breakout on volume. And again, I have a feeling this has a lot more to do with some of the stuff that the CEO has said, which is over half their business now comes from people not in the United States going. They've expanded it quite a bit. And, of course, sending new ships to China. I don't know if they'll have the same problem that Qualcomm had. If they make it or act like they make any money, maybe it will. But a solid breakout with RCL, so you'd want to make sure if this could come back down in that $57 range on light volume, might want to be taking a look at that if the market moves faster. Just reading a few news stories out here. So that's one of them. What else did we have out here? Cry, CRJ, Bob, DPS. They need to put some kind of Beano in Dr. Pepper, I think. Snapple. Kind kind of weird that Snapple and Dr. Pepper would be under the same roof. Seems like kind of the most disgusting flavor with some of the best from the Snapple people. Certainly a breakout with a volume getting close to a sign of strength. 2.5 million shares already today. And, of course, breaking the $60.50 high out here. And just see if there's anything else I wanted to take a look at. See what we have. BBW. Build-A-Bear Workshop. This thing got blown apart. This is another one of these stocks that down on what you would think would be pretty heavy volume, 400,000 shares. This broke through the day that it went up on 740,000 shares back on May 1st. So pretty much a tough thing out here coming back into it. But looks to me like you're probably going to find support just at $10. And it's not very much farther down after a day like today. And we'll keep an eye on it. See if there's anything else out here. PCP, USG. Let's take a quick look at USG. And it's blown out its low. So we can certainly look at that, blowing out the highest volume, which was February 3rd, $28.80, 2.5 million shares. We already have double that. So you've blown that out. That opens up the door to the next low at $24.98. Okay. To see what else is in the list here. USC hot. Hot's off 5%. Starwood Hotels. This thing's been banging up against its previous highs. Never really had a sign of strength. You needed more than 2.8 million shares from the January 22nd high at 81.39. It's drifted over that, came back a little bit, tried over the last couple of days again stay over that, and it's solidly back into this trading range, which brings it back down to first $78 and then back to $73 on Starwood Hotels. See if there's anything else out here. Okay, let's take a quick look and see if we've got anything moving for tonight, and see which one's percentage change out here. Home Away. I thought that wasn't out till after the bell, and it's already moving fairly significantly. I suspect it's on those housing news. Let's take a quick look at the headlines. Yeah, it's after the market bell, but it's already headed back down. You could make a good case that Home Away is set up at ABC down. If this does fail tonight, well, what do we got? $37, $35, and a small ABC would take it to $30. The bigger one, which I'm kind of looking at, maybe there's too much of a retrace in this. I bet there is. Why? Yeah, retrace 75%, which is an awful lot. But even if it is, you can look at a 1-to-1 taking it to $25.59, which would be right in that gap. And I tell you what, look at Home Away to race there in a nanosecond if there's any kind of blip in their earnings, because that gap has been tested by higher volume on the June 9th low at 27.95. And, of course, previous lows in that range were 2.2 million shares, and October 2nd, 1.2 million shares. So a super high volume low on Home Away. That does not look good. Okay, and let's see where else we're looking at here. Clack after the bell, not that big a deal. On the upside, Pandora is already up high. It's got a lot of short interest in it. And see if we can check the headlines out on it real quick. I'm pretty sure it was after the bell. Yeah. Oh, it's already out. Scheduled for 2 p.m. I thought it was later today. So it must have. Pandora knows how they can. Pandora stock is up today. Okay. The music streaming service second quarter earnings report, which is expected to be released after the markets close. So that must be wrong about the 2 o'clock earnings call. I don't know what's actually going on here. I'd have to research this a little bit more. Maybe just running the shorts a little bit. I was pretty sure that earnings are after the bell on Pandora. So we took a look at that, but it is moving almost 3.5% higher. VeriSign, VRSN. I also have this one after the bell, but they're ramping this one a little bit into earnings. Ever since Google's talked about coming out after the business, of course, this company's been pretty much in a downslope from January 16th, where it was $62.96. Let's take a quick look at the headlines to see if there's anything. Yeah, after market close, nothing else out here. So we could look at that, but this is certainly one of these stocks where you could see Google just blow this thing away. You can go back and see the date that happened, and because it stands out like a sore thumb on this chart. It was back on March 17th, 10.8 million shares on that down day, and it's been going sideways ever since. Came back, touched a gap that actually started back here over a year ago, June 26th. It's been, August? It's July 26th of last year. 4.2 million shares was the support. So you did get a decent buy signal on April 30th. Ran up 51.95. Now it's kind of going sideways out here, but certainly not a lot of interest in that particular stock. Clack, of course, after the bell tonight. I didn't see a lot in this. Certainly looks like this thing's starting to roll over already. A little weakness coming out of it. Of course, another one of these stocks that blew through its April 3rd high, gapped up on that day, which was on the 30th of June, and kind of been doing a nice little dome out here, coming back down to this level. But I would say if they don't surprise, probably looking at $71 on this one, so probably not a lot of risk reward. So we'll look out there. See if there's anything else out here. That's it. Just take a quick look. VeriSign up, Baidu up, Swisher up, SWI, I think. So some of these are ramping into earnings at least a little bit. SolarWinds, SWI. I kind of remembered looking at this morning earlier in the day. Had a little higher. Of course, SolarWinds isn't the kind of company that you think it is. You'd think, okay, SolarWinds, well, it's got to be a solar stock, right? It actually is in the business of information technology and structure technology, and with all the solar stocks coming out, SolarWinds, probably not a great name. A lot of confusion out there. But this thing's certainly going sideways. Looks to me like it's building some steam for a big move after the bell tonight. Anyway, we're going to look through more of these and when we come back.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And as we come back, of course, after the bell, we've got Starbucks tonight. It's already pushing up past its high in a lot of things, starting to try to run a few of these stocks before the bell and news. March 21st, $78.64, 9 million shares. And, of course, the best you can get is about 4 million shares out of this thing. Of course, 4 million shares today, so maybe 5 million by the end of the day. And, of course, the market that as we come into the close is starting to continue to drift away. Looks to me like we've got more and more of these. Just the character of the earnings reports has changed. Normally, if you had real good earnings, the stock just spiked, and that was pretty much it. Kind of like ISRG. This is kind of the thing. I mean, you had a huge short interest. The thing spikes. It runs the next morning and maybe goes up a little bit more. But after hours, this thing didn't like come up a buck and then slowly I mean, basically this thing popped. And that's normally how these things work after hours. I mean, if the earnings are good. When we looked at Facebook after hours, I mean, it was up and down 50 cents, up a buck. And then, of course, they had to lay out a giant story about the reason that the earnings were up. Same thing with Apple. So we've seen kind of a lot of these bigger stocks get talked into higher prices the next day, not instantly respond with higher prices. And it wasn't like they came out with something later that said they turned everything from lead into gold. It was just a straight earnings call out there. So it is going to be interesting how some of these react. But as we go through them, and Tom O'Brien calls them for you in the 4 o'clock hour on TFNN today, just look and see how those things react. Do they just kind of tick up and then start moving? Gilead, another one of these stocks that if you believed what they said, they truly are turning lead into gold. This thing popped a little bit, not doing so much now. There's a lot of suggestions that they have one of the best drugs in the world. It actually cures something. It doesn't just put a Band-Aid on it. But it is very expensive. I think $80,000 or $90,000 for a full course of treatment. And been very successful so far, but the thought is that if they told people how much money they were making on it, that every doctor and the president and every communist would come out of the woodwork saying, you have no right to charge that. We have no idea what it cost them actually to develop that drug and how many other drugs that they developed that didn't get through the gate. So I'm more of a laissez-faire capitalist on drugs, well worth the $90,000, especially to healthcare professionals and insurers, where you could look at the average cost of Hep C costing somewhere around $600,000 over 10 years, $90,000 over a couple of months of that seems like a deal. But I think they're more interested in seeing if they can take some of Gilead's money, and probably why the tepid response. The thought is whether or not they're going to be able to keep those margins, or if they're going to have the do-gooders go out there and say, hey, that's not your money, that's our money. You have no right to get that. You may have had 20 drugs that you spent billions on that didn't come out and give a cure. This one did. But you're making too much money. And I think that's the tepid response from Gilead today. Anyway, have a great and safe day. Remember to sell when you can, not when you have to. And we'll see you tomorrow, same bat channel, same bat time. Hang on for Tom O'Brien on most of TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.